Daily outlook for Monday, July 27th. All right, let's take a look at where we are on a daily chart. Well, first things first, we can analyze here the previous weekly profile, which was a Tuesday high of week. This is something that after the rejection here of Wednesday, I tried to continue higher off the expansion of Tuesday, ended up making a divergence. We're anticipating for price to come back towards discounted levels. And in the moment, right, inside last week's profile, that discount level was this weekly fair value gap, right? And we're saying how this weekly fair value gap is important. It is important because of where it's located, right? Being at 25% of the 3-month look back. Now you can, oops. Now you can see that after many attempts, right, trying to rally either from 50% or simply touching the high here, the market has now closed below 50%. Okay, and not only has it closed below 50%, but you can see that around 50, 25, and the high of this BISI, price has created premium arrays. Okay, such as here a premium suspension block, a premium order block, a premium rejection block, and obviously here a mitigation block, right? This here being the discount bullish order, right? Discount order block from the previous monthly profile. You can see that price, right, try to use this as a bullish order block the way, right? Originally this is what this PD area was. You can see that then once it started breaking below 50, right, it then started to using this level as a premium array instead of a discount array. Okay, so essentially all this is telling me, or at least this is what I believe, that, well, okay, I personally still believe that the market should continue trading to all-time highs, right? And I still do think that it is a matter of time, because personally I believe that the profile of year is open, low, high, close. Right? I simply believe that from this point, the market should retrace to continue higher. Obviously, everything's possible, and I could be proven wrong here, right? This is always a possibility, right? And this is why it's important to go level by level, right? So now the level at 25% here of the range, which this dealing range is overall, right? It's a bullish dealing range. We saw 25% fail, so now I'm interested in seeing how it will start trading, around 50%, if not towards, well, in discount, right, in the discounted part of the range. Okay, so we're looking at, say, 62.5, 70%, 75%, right, around the OTE range. Okay, so if we look at this chart, you can see at 50% of the range here, if we go maybe say to a weekly chart, well, there's a lot here of weekly fair value gaps, as you can see, right? And I do believe that all of these should be valid, okay? But from the perspective of a daily chart, we'll come back to these fair value gap when we look at lower time frame charts. But overall, this is how I was looking at it, right? You can see that at 50% of the range here, there's a large monthly fair value gap. And in my opinion, this is a pretty significant fair value gap, because you can see that on the left side of it, right, there's previous all-time highs. Okay, so this is a bullish mitigation block. But what you can see is that towards 50% of this level, there's this, right, which was the January high here, which in my opinion is a bullish breaker, right? Because the market had a shakeout higher, had a shakeout lower, and eventually displaced the range. Okay, so this is how I'm viewing the daily chart. Price has failed to continue to expand from 25%, so I'm assuming that it will want to retrace towards 50% or discount. At 50% here, right, as we said, there's the range of a monthly fair value gap, right, and on the left side of it, you got the range of, you got the range of a bullish mitigation block, a bullish breaker. And then if we were to look at what's below 50% of this range, on the weekly, it's a bit more obvious to look at. Right, there's here a very large, obvious fair value gap inside of the range. Okay, about the same size, say, as this one that price was trading in for quite some time. Okay, so personally, from a daily chart perspective, I'm looking at it like this. Right, we have fair value gap at 25%. We then have a level at 50% being, say, the upper half of the monthly fair value gap. There's also the bullish mitigation block, previous all-time highs. And then towards OTE of the range, you get 62, 70%. You got here a large fair value gap. Okay, so to me, it's going to be real interesting to see if the market is, right, if we're looking in terms of a continuation higher, if the market is able to have a shallow shakeout, right, inside the monthly fair value gap to then continue trading higher. Now, this can happen this week. If it does happen this week, then I do believe that the probabilities of seeing the month of August being open, low, high, close will be much higher. Right, this would be one of those fractal deliveries, say, when you're trading a, right, because here, what's the monthly profile for June? It's a, well, most likely a classic sell. Right, you got expansion, consolidation, expansion, retracement, expansion again. Now, if this month here will close bullish, very likely the low of the quarter, in my opinion, should be put in. Okay, here we're looking at a Tuesday low of week or a Wednesday low of week inside a higher time frame PD rate. Okay, so again, this simply the, right, touching the monthly fair value gap here can be enough to send price higher. And like I was saying, this would be a fractal delivery, okay, as we've seen on say daily profiles, where, right, the profile of day overall is, say, a sell profile, but at the closure of it, right, there's a reversal. Okay, this would be, in my opinion, one of those scenarios that look like this. If not, I do believe that this fair value gap here should be very important to provide a continuation lower. So essentially what I'm trying to say is I will be anticipating for the high of week to be created inside of this suspension block. Again, there's just so many PD rays, right, that are backed up by this fair value gap. The order block, the rejection block, the bearish mitigation block. You got another large wick in here. So ideally, if I'm going to see a continuation lower, right, towards, say, the range below 28,000, starting to trade and offer balance inside of the monthly fair value gap, in that case, I would prefer to see the week trade higher first, again, with the idea that we'll see a high of week here inside the suspension block to then continue trading lower, right, towards discount objectives. If not, if the week, okay, were to open and start trading lower, look, it doesn't mean that it needs to reverse, right? Price can be very bearish and continue trading lower. But in that case, what I would need to see is for Monday to provide some kind of sell day. Okay, because if Monday doesn't provide a sell or a New York reversal profile day, I think that, well, I think that only those one or the other profile would allow for the daily chart to have an expansion towards discounted levels, and by doing so, likely creating here, say, another fair value gap. Okay, all depending obviously on where this range will open and how this will deliver. Right, and only then, even if the week is bearish and my drawn liquidity right, I will favor a drawn liquidity towards discount. In that case, then I won't have to anticipate for price to come back inside of the suspension block, right? Because the expansion of Monday would create another one at these levels. Okay, so at worst case, right, price would end up doing this, then come back lower, or can simply continue trading lower, right? And leaving this as a breakaway creates a fair value gap, consolidates, right, and then can continue on trading lower, or again find a reversal midweek, right, and then, you know, I'm not sure if it can be obviously the low here of the quarter, but I don't want to bet on it, right? I would rather take it day by day and wait and see, because price could be very bearish for all it matters. Okay, my point here is not to try and call a bottom, but is to try and identify, right, how the weekly profile here could form based on where we are in the range, based on the time, right, last week of the month, right, and putting all this in the perspective overall of the quarterly profile and premium 50% discount. Okay, so in terms of discounted levels, I do like the range around 28,000. Obviously, this would be a low-hanging fruit objective for Monday. The weekly profile would likely cover a larger range. Now I know that there's a pocket here around these levels, right? Because it can be, say, that the week does something like this, right? And you wouldn't have anything here identified on the chart to frame your, say, your daily profiles. But once we look at the lower time frame charts, right, we'll see that there is weekly fair value gaps here, and those levels from a lower time frame perspective can be useful to frame session profile, daily profiles. But here from the perspective, say, of a monthly chart, I would rather keep simply, you know, 3 clean levels, 25, 50, 75, and wait and see how time were to trade around these levels. Okay, so again, very important suspension block. Only reason why to me this level won't be traded to is if Monday creates a SIBI below it. Then in that case, this can stay breakaway for future movement. If not, say here Monday trades lower but fails to have a bearish closure, right? And by doing so fails to create, say, a fair value gap, then I will be anticipating for price to come back in it, right? And then we'll have to see the reaction. This should, right, what I just said to me is the most important thing that I'm noticing on the daily. Will Monday likely confirm this as a breakaway, or will Monday retrace into it and fail, or will Monday trade away from it but then close back in the range? Okay, and if it does close back in the range, then again, we'll be anticipating, say, for Tuesday to trade back higher. Okay, we can look at the 3-week look back. We can start maybe simply by looking at the previous weekly range, which was a Tuesday high of week. Right, as we had seen last week, there was a divergence being created between the high of Tuesday and the high of Wednesday. That is what confirmed the weekly profile. That is why we were anticipating for price to come back towards discount. And now it has done so. Okay, so I just want to identify this range here being the previous weekly range. And, you know, yes, we have relative equal highs. But what I'm mostly interested in about this chart is the PD rate that's located at 50% of this range, okay, which is here. We have a large fair value gap inside of the range that's not been traded to, okay, and this fair value gap happens to have here a pretty tiny volume imbalance, but nonetheless has a premium volume imbalance, so we need to include that inside the analysis of the fair value gap. So in terms of the weekly profile, I do believe that this should be a very, very important level. Again, ideally, if the market will keep on trading towards discounted levels, then I would like to see a high of week being created around these levels. I say if you look at this 4-hour chart, sorry, at the 4-hour fair value gap, and you look back on the daily, you can see that it's more or less the same range. Again, the only reason why I wouldn't anticipate for this level to be traded to is if Monday were to create an expansion and, okay, again, a daily fair value gap below this one. But if not, I think it's very, very likely we'll see this level being traded to again. So this to me is the main PDA of interest. Now, in terms of discounted levels, obviously there's nothing else. Well, not that there's nothing else, but there's nothing located here from a 3-week perspective to be able to identify the discount levels. Okay, so we'll need to look back here inside of the 3-month look back range, and we'll need to put up those levels. But meanwhile, what I'm interested in is to see overall the range of the 3-week look back, right? Because as we said, this level doesn't provide us with discount levels, but does provide us with premium levels, okay, in case the market will do something like this. I'll put back this fair value gap in a second, but meanwhile we can identify here the range. And so I have my level at 50%, right? Which now obviously this is not 50% of the 3-week look back, but it is 50% of the previous weekly range. What I'm interested in, okay, again, inside of this range is my premium level. This would be useful to me in case the market does this. Okay. Now, there's a lot of PDAs in here. There's fair value gap. There's a wick. Right. There's a couple order blocks. Personally, I do prefer this. Okay, I do like this level because it is a breaker. Right. The market had opened here. This is on a 2-week look back perspective. Market opened, traded higher, traded lower. Right. So had a shakeout lower, a shakeout higher, and then from there breaks the structure. And in fact, the previous weekly high here comes from these levels. Okay, so I do believe that if the market will be finding a reversal in discount, that this should be the drawn liquidity for the week. If not, the 3-week look back high, all depending obviously on the profile. If the profile of week will be Tuesday or Monday low of week, then I do believe that aside from 50% here of this bearish breaker, the drawn liquidity can be the highs. Okay, so we've identified our premium array. And there's another level that I'm interested in, which is located at 25% of the 3-week look back, which is this wick here. Okay. Now, why is this wick important? To me, this wick is important in the scenario that, right, in the most bearish scenario, the one where Monday here were to create another expansion lower. Right, because overall price comes from expansion, consolidation, expansion. So it can be that at the open price opens and continues trading lower. Right, and as we said, that would likely create a daily SIBI above the suspension block. And in that case, right, would likely leave this as a breakaway for the moment. And I do suspect that if it will do so, it will do it from the wick. Okay, so that's why to me this wick will be important to gauge order flow for the weekly profile. And now I can put back my level located at 50%. Okay, so in terms of the weekly profile, this is how I'm viewing it. I'm viewing this PDA here at 75% being the bearish breaker as a drawn liquidity for price in case of a buy or reversal profile. At 50% of the range, all depending on the profile of week. If the week will be an open low high close profile, I do believe that this range here should be low resistance. Okay, I wouldn't want to see price stall at these levels too much or for too long. If it does, I do believe it will continue trading lower. Okay, if it does something like this here, say it expands into it, but then the next day cannot find a quick continuation out of it, then in that case, I do believe that we'll want to keep on trading lower. And the PDA located at 25% of the range, 3-week look back range, to me would be useful to identify a breakaway suspension block on the daily. um, or as price is would be making its way back up inside the fair value gap on a lower time frame perspective, say for session profile or even identifying the daily profile itself, seeing the reaction around these levels should be important. Okay, so we got all of our premium levels here. Now, in terms of a discounted level, right, that's a potential area where price could be making the low of week. Personally, what I would do is simply identify all of these weekly fair value gaps here. Right, there's overall 3 main ones. Right, there would be this one below it, but I mean, this is not realistic for the week itself. I don't even know how realistic it is for price to trade towards this level. We would need a pretty big expansion, right? Would need to be an expansion of 6,000 ticks or so. Could be. I mean, we do have a lot of earnings. We have FOMC. Overall, there's consumer confidence on Tuesday, core PCE with GDP on Thursday. So there is a lot of data. So it can be that it will be a volatile week. But this would be really, for me to price to reach here, would need to be the scenario where we see a Monday high of week, right? In the scenario where Monday expands lower and leaves the suspension block on the daily as breakaway. Only in that case could I anticipate for price to come back lower here. Okay, so there is quite a lot of stuff happening on the chart here. But again, all these levels here, right, you need to pair them with time and with the narrative, your anticipation of what the weekly profile can be. Because if you look at these quadrants and you're going to tell me, there's too many levels, obviously price will end up respecting one or the other. Well, yes, but it's not because price respects or doesn't respect that there's a trading opportunity. The goal is to be able to align these quadrants with time, right, and with at least your drawn liquidity, right, the direction in which you believe the market will trade to. So again, to me, this level is most useful if I'm going to see Monday expand lower. If Monday will expand lower, I don't even want to see it come back to the fair value gap. Okay, and this will tell me that price is heavy. Okay, so I would anticipate, say, for Monday to trade something similar to this, inside this lower fair value gap, located around 28,000 or so. If not, if Monday will open and will immediately start trading lower, then I'm interested in seeing how these discount quadrants will hold price. If not, overall, like I said again, the one at we have the breaker at 75%. To me, this is only useful as a drawn liquidity. And then we have this fair value gap here, right? Which, if Monday opens and starts trading higher, disrespecting, right, from the start of the week, the discount rejection block, then I do believe that the drawn liquidity for Monday will be this fair value gap. And then from there, we'll need to see the reaction. Again, if price will be bullish this week, I will anticipate for this fair value gap here to be low resistance. I don't want to see price spending much time inside of this range. Maybe to get a better perspective, we can look at the profile here. And no, it actually doesn't tell me what I wanted to look at, so never mind. Maybe we'll look at it on a 3-day look back. I think that's where I had done that analysis, which we can look at right now. So first of all, we can analyze the phase of price delivery from which price comes from. Price comes from here, a New York reversal that ended up failing. Right, this is one of the examples like I was talking about before in terms of a fractal delivery. In this case, happens to be the opposite, right, where we have a bullish daily profile but sees reversal at the closure, right, or at least sees the creation of bearish order flow at the close, and the next power of 3 continues trading lower from it. In fact, here we had divergence, right? So New York reversal profile failed. Eventually, you get a classic sell profile out of it, and then here on Friday, you got in my opinion, this would be a range to expansion profile. Right, so a continuation here of the of the closure essentially of Thursday, of the classic sell of Thursday. Expansion, consolidation, expansion. Okay, so the way I'm going to be analyzing this is kind of the same way that I did on the 4 hour, meaning I'll identify what's located here inside of the previous daily range, but I'll also want to pay attention to the 3-day look back to identify premium levels in case price will trade higher. And then in terms of discounted levels, which we can put up right away, I'm simply going to put up all of the weekly fair value gaps, right? And these should be sensitive to price. If you don't want to have this many levels on your chart, you could simply use the levels of the monthly fair value gap, right? Which would be one big level. Okay, say something like this. Right, would be one big level, and if these levels here, all depending on the time frame on which you trade on, or overall your trading style, if these ranges are too big for you, then you can split the quadrants even more, right? And these levels here should still provide sensitivity, but I would only recommend to trade this from a lower time frame perspective and not to try and pinpoint, say, the weekly profile from these levels. I think these octans here would be only helpful from the perspective of a say session profile, okay, so a lower time frame profile. Okay, so let's start by identifying some premium levels inside of this range. So if we look at the 3-day look back, so anything below 50% here, I'm not interested, because these are levels that I can cover inside of the look when we'll analyze the previous daily profile. So you can see at 75% here, we have here a bearish breaker, but most importantly, right, then obviously this is a relevant level right here, the wick that's located here on the 4 hour, or simply, the breaker here located at inside of premium. These are relevant PD rays, but personally I do like that through this level there is a 4-hour fair value gap, right? And this is the same one that we identified here, which was located at 50% of the previous weekly range. And so this will be also my potential draw, premium draw liquidity in case, right, Monday starts trading higher. Overall, daily profile either being open low high close or open high low close. And if it is open high low close from these levels, then I probably would like to see it be a New York reversal. Okay, create some kind of intermediate term high inside of this fair value gap and then keep trading lower from there. Okay, so that was analyzed. I mean, if price were to displace this fair value gap, then I don't think there's anything stopping it to trade towards the relative equal highs here inside of the range, right, which is the 3-day look back. Now, it doesn't need to happen all on Monday, right? But Monday, if price will trade higher, could provide the setup, right, for then Tuesday, to trade higher. Okay, let's go down to a 15-minute chart. I want to analyze price from this time frame. So as we said here, a range to expansion profile. Range to expansion profiles are always continuation profile, but oftentimes, okay, they can lead to reversal because they leave relative equal highs, right? That's the idea. Well, reversal from a lower time frame, right? Because this could be from a higher time frame expansion, retracement, expansion, but a higher time frame retracement is a lower time frame reversal. So mostly, like if you look at this daily range, right, and say you split this daily range in two, most of the action here was done in the PM session, right? That's where price started expanding here, and in New York AM eventually found a deep retracement inside of the range, creating right? An intermediate term high here, close some fair value gap. All right, and then from there keeps trading lower. So I think that inside of this curve here, this is where most of the PD rays of interest should be, right, for tomorrow's profile. All right, so if we look at the lows here, first of all, right, we can see that we have a potential bullish order block, a potential bullish breaker. We don't have one yet, but this can be a possibility. 25%, we have here a very large fair value gap through the range. So this is my first level of interest. And then you can see that at 50% here of this previous daily range, there is a large order block. But most importantly, in my opinion, there's a range of here an intermediate term high, right? So intermediate term high, okay, because this fills more than 50% of this fair value gap located at these levels. So you could use the order block itself, right? Simply the quadrants of the order block, or you can use the rejection block itself. Okay, just like the PD ray here located at in premium 75%. Right, you can use the order block that creates this rejection block, or you can use the rejection block itself. In this case, personally, the way I'll use the premium array, I will use the rejection block to grade it. Again, this to me is useful only as a drawn liquidity if I'm anticipating an open, low, high, close delivery. And at 50%, since the order block is pretty large, right, and takes up more space than it does, at least, you know, inside. How can I explain this? It takes up more space inside of the range, right, and is located right at 50% compared to the rejection block here, which is, say, maybe an optimal trade entry. Okay, maybe if we split, right, you can see that at 62.5, that's where the intermediate term high comes in. Okay, so for this reason, I would probably prefer to grade the bearish order block, but it obviously can get confusing here with the fair value gap being right below it. And so in this case, the way that I'll identify it, I'll remove the low and the high, simply keeping them in mind, and I'll identify 25, 50, 75% of it. Okay, so these three levels here, again, these should all be useful to identify the drawn liquidity. You want to see how time moves around these quadrants. If you come inside the New York session, and this fair value gap to me is probably the most important. If price will continue trading lower, then I don't think that price needs to come back all the way up before doing so. I ideally would like to see it continue being heavy, okay, so order flow, heavy order flow towards discount targets, rather than it come back and create high resistance to then keep trading lower, right? Because sell profiles, at least from a daily chart, tend to be more aggressive than buy profiles. Obviously, this was maybe a bit of an exception, but you know, from a psychological perspective, also these market makers, daily market maker sell models, they put fear into people, right? So that's why they tend to be more aggressive, bigger ranges. So this is what I would be anticipating through this fair value gap. And then if this fair value gap were to get broken or displaced, I think the only thing that would probably save this, right, in terms of a continuation lower, would be a divergence, which can happen with either this intermediate term high or with the previous daily high. And then obviously if price trades past that, then I'm looking at the PD ray at 50% of the previous weekly range, which is the fair value gap. And in terms of discount arrays, again, either you can have all these weekly fair value gaps identified on your chart and see how price moves around them from a lower time frame perspective, or you can simply put up one level being the monthly fair value gap and split those levels in 8 instead of 4, right? Like that, it will give you a bit more of a defined range from a lower time frame perspective, because when you need to trade, say, a range, right, a quadrant, say in between 100% and 75% of a level, and there's, say, 500 ticks separating those two levels, it obviously can get harder to identify on a lower time frame perspective. So maybe cutting that 500 tick range into half by adding the octanes to the period of interest can be beneficial. Okay, so we'll do a quick recap and I'm going to wrap it up. We saw on the daily, we come from a Tuesday high of week. The market has now closed below 50% of the weekly fair value gap, located at 25% of the 3-month look back. So because of that, I do anticipate for price to come back towards either 50% or OTE here of the 3-month look back. My overall bias, right, for the yearly profile remains bullish. I do believe that this is simply a retracement for price to trade higher. I personally don't believe that there's enough narrative, right, to completely reverse this, especially not the way that the faces of price delivery, right, the way that it's been delivered here, expansion to consolidation. To me, this sell profile here, especially that the quarterly open doesn't have any action in right above its open, so in premium, I have to say this is definitely sketching me out, right? So essentially, I would anticipate it for it to soon start reversing, and the way that it, right, at the time that it does it will be important, because like we said, if the end of July here were to close, say, with a, I don't know, Tuesday, Wednesday low of week, this can be pretty significant, not only for August monthly profile, but for the quarterly profile overall. If not, if price will either first retrace inside the suspension block, right, to keep trading lower, or Monday opens, expands lower, and creates a SIBI below the suspension block, then I do believe that the low-hanging fruit drawn liquidity should be the monthly fair value gap. And then it will be very, very important, in my opinion, to see how it starts trading around this range, say around 27,500 up to 28,000. Obviously, time of day inside the week will matter around these levels, and the daily profiles that form right inside those days. And if not in discount, right, we got here a large fair value gap. This fair value gap happens to cut through the breaker that we talked about, being the January highs. If not, right, we got this level, which should be important, previous yearly high here, previous yearly profile high, 2025 high, right, which is a higher time frame bullish mitigation block, as we looked at. Okay, so once price starts trading, if it were to start trading at 50% here, I think that it should start getting high resistance. Okay, meaning either should consolidate for a bit, right, before doing something like this, or should have a V-shaped reversal. Okay, so bounce the range and reverse. So discount drawn liquidity, we're looking at 28,000 to 28,500. Maybe 28 to 27,500, maybe down to 27. For Monday's daily profile, then obviously not this deep. I would probably maybe down to 27,800 here, right? The high of the monthly fair value gap. I'm not sure it would expand past that. It is possible though. Okay, so these are main discount targets, and premium targets for the day of Monday. I do believe it's only going to be the suspension block here. The suspension block being created inside last week's profile. I don't believe that on Monday price will have enough juice to to get past this level, right? If that's even what it's gonna do. Obviously, it will all depend on the open. Okay, it could be price gaps up here and then rallies, right? Everything's possible. But what I'm saying is probably won't trade past this level, okay, even if it trades high at all. On a 4-hour chart, we analyzed that at 50% of the previous range, we have an unfilled fair value gap here. Okay, so definitely the PD of interest, as I talked about. What I said is, if this week will be open low, high close, I do anticipate for this range to be low resistance. I wouldn't want to see price stall too much inside of this range. I would want for this range to be a balanced price range, because probably another fair value gap cutting through this one. And the reason for that is because it happens at 50% of the range. And because if price will be bullish, as we know here, there's a daily suspension block, right? And what I'm saying, I don't want to see price spend too much time inside of this range, because then it will probably trade lower from here. And this will be also a clue here for, say, for a daily profile. Okay, say you come, I don't know, it's Wednesday or Thursday, and the weekly profile is looking like this, right? And you're looking to trade New York, and New York can't find a quick expansion away from this level. These are all clues, right, as to what the the weekly profile can become based on how time is moving around these quadrants. I said if we're going to have a very bearish week, price doesn't need to come back inside of this fair value gap, can leave it breakaway. If it does so, then I would like to see it reject from the rejection block located at 25% here of the 3-week look back. Price can simply trade to these levels and continue trading lower. Right, and as you said on the daily, this would probably look like the creation of a SIBI above the suspension block, leaving this as a breakaway gap. And then we identified a level being the bearish breaker at 75% of the range. And as I mentioned, this level should only be useful to me as a premium drawn liquidity. In discount, I have identified all the weekly fair value gaps that have been left open. If you don't want to have too many levels on your chart, you can, like I said, you can simply put up the one big monthly fair value gap. If those ranges are too large for you, you can cut them in 8. Or if you don't feel comfortable having all these levels on your chart, then you can simply use time as your proxy. Right? You don't necessarily need to use price levels, but it can, it gives a good confluence when time is on your side. Well, when time is on the side of your trade idea is what I'm saying. And here on the 3-day look back, we did kind of the same analysis that we did on the 3-week look back, where we analyzed what's located inside of the range first, right? So we saw that at, essentially from 75 down to 50% of the 3-day look back, we have a large 4-hour fair value gap. There's the same fair value gap here. And we said that this can become a premium drawn liquidity if the market here were to inverse one or two of these levels. Okay, but I do believe that if price is to inverse this hourly fair value gap, right, we had refined this to a 15-minute chart. If the market is to displace these levels, then I do believe that it will want to go and trade towards premium targets such as the intermediate term high, the previous daily high, if not the 4-hour fair value gap itself. Ideally, if price will keep trading lower, I wouldn't want to see it trade too high inside the range. This fair value gap can be enough, right? Simply trade and then trade lower. Or at the worst case scenario, it comes back to 50% of the range, rejects inside the order block, and then keeps trading lower. If it really were to break these two levels, then I think that the market will want to draw towards the previous daily high. And in terms of discounted targets, I use the same thing that I use on the 4-hour chart, which is all the weekly fair value gaps remaining inside of the range. one last thing I wanted to look at, if you wanted to if you wanted to put up some standard deviations to help you identify drawn liquidity or you know, anticipation of what can happen next. There's two of them, right, that are pretty similar inside of this range here. You got this first market structure shift. If not, you have this one right here. I probably prefer this one here since it has to do with the creation of the high of the previous monthly range. But overall, you can see they are very, very similar. Right, and you can see the 2 to 2.5 leading towards the upper half here of the monthly fair value gap, if not terminus, or at least anticipated terminus of this market maker sell model would be here in OTE, right, where we have that weekly fair value gap identified, cuts through the breaker, right, cuts through a portion of the mitigation block, etc. All right, I think that wraps it up. Good luck and good trading.